What I am trying to cover and trying to discuss today is about the tax rules and regulation. To start with basic understanding. So yeah, the very first thing is before understanding what is taxable, before understanding when is it taxable, let's understand for which period it is taxable. So in generally income tax, there is a tax year it is called, and it is also known as a financial year. The financial year starts from 1st of April for a particular year. Let's assume for 1st of April 2024 and it will end in the following year 31st March 2025. That is the year wherein which the income or expenses for that particular year is accounted for. For that particular year, income and expenses which we have accounted for, we calculate the tax and all those things in the assessment year. So when does the assessment year starts? When are we supposed to pay taxes? When are we supposed to calculate taxes on that? It is in the assessment year. Financial year is basically 12 months of period which start from 1st of April of that particular year. It's end with the 31st March of the following year. So for that particular financial year, we calculate taxes in the assessment year, the following year, which starts on the 1st of April. We discussed about 1st April 2024. The financial year ends in 31st March 2025. For that particular financial year, assessment year starts on 1st April 2025. That is the period from which we start calculating for 24 to 25. We assess what all are the incomes that we have earned, what are all the expenses. For salaried employees, there is no such expenses allowed except basic deductions if you are under old regime. We'll come back to that old regime or the new regime. For the people who are into the profession, have their personal clinics and hospitals, they will have to account for their expenses and everything. So that assessment, that is where the term assessment year comes. The assessment of the income which you have earned in the financial year. So that's how it is. For a financial year 24-25, we call it assessment year 25-26. And there are the third calendar year which we generally follow for all our other activities. When you are joining for a hospital or a clinic for a fixed number of hours, and you have leave policy that you are supposed to follow, and you have like regular pays, the working hours are fixed. It is like you will have PF, ESI, and PT as a deduction from your this thing. If there is no PF, ESI and PT deduction, that means you are on a contract. Either they are paying you as a professional fee, that is where they are not deducting this PF, ESI and PT. Provident fund is a social welfare scheme. If we are actually their employee, they will deduct provident from our side, from our salary. Let's assume 1800 per month. They will contribute 1800 from their side, and that gets deposited to the provident fund office. That we can claim back. That is our money. It is actually beneficial to us. It is actually going to come back to us with interest, 8 to 9%. Government, it is very safe, secure fund, which can be, you can take it when you are retiring or when you are still into employment. After 6 months, suppose you are getting married, so you have health condition, you can withdraw from the provident fund. So this is in the case of salaried employee. This is not the case with a person who is appointed as a professional consultant for an hospital. In that case, generally hospitals and clinics, they don't want to hire doctors as a employee, because these are all the commitments they will get into once they hire that person as a employee. Employee benefits, like if you are employed for a organization for almost 4.5 years, that is almost equal to 5 years, you are eligible to get gratuity. Gratuity is like continuous service to a particular organization. Organization is supposed to give you a gratuity. The gratuity is calculated 15 days per month, per year, as per the latest salary. So suppose you are working there for 5 years, 15 days a year, that approximately counts to 75 days of salary you are just supposed to get as a gratuity. Suppose you are coming out of the hospital after 5 years. 4.5 years is counted as 5 for the gratuity calculation. These are all the benefits when you are into the salary. You are hired as a salaried employee. But when it is in the case of professional fees, you don't work for fixed hours there. It is based on your terms that you will work for so many, not just for the hours, maybe the number of consultation you give, you will get back that amount of professional fee as a share. And the second important thing is, we are not aware, we give consultation to a lot of hospitals, like consultation at a lot of hospitals, but we don't raise an invoice. Suppose for a month you have done a business with them, professional business with them for 1 lakh rupees. You should actually raise an invoice for 1 lakh rupees to them, because you are not an employee to them. You don't have an employer-employee relationship with them. So there is no employer-employee relationship. That means you are giving them a consultation on behalf of the hospital. You are sitting there giving consultation to the patients. So that is where you are supposed to raise invoice, not to the patient, to the hospital, for the total amount of money you have done as a business in the month. and you are personally liable for tax calculation and everything. In if it is professional income, they deduct 10% abrupt, ad hoc 10% of the fees, they give it to you, and they deposit 90% into your bank account. So this is in the case of professional fee, and you are yourself responsible for maintaining the records for all your expenses in professional fees case. So that is the difference, basic difference between. We should be able to understand what is the term that we are joining the organization. As a salaried employee, if I am a salaried employee, then what are all the deductions they will be doing? Will I get back those provident fund ESI? ESI is like state insurance. Once you are registered under state insurance, every employee whose salary is less than 21,000 mandatorily required to get registered under ESI, we get the employee state insurance benefits. You can access the government hospitals as a cashless and everything. So professional tax is a tax, you don't get back anything. That's a tax that you're supposed to contribute to the government of state. So what are the key indicators? What we have just discussed, I've just re-mentioned it. There will be a formal employment agreement under salaried case, and they will deduct TDS on the basis of slabs. For a salaried person, it is not 10%, 5%, nothing like that on your income. It is on the basis of slab. From this financial year, which has just started, April 2025, until 12 lakhs of salary, there is no tax that is liable. We are liable to pay. We have a tax exemption until 12 lakhs in case of salaried employees. If suppose you have crossed 12 lakh of rupees, suppose your salary is 15 lakh, your 15 lakh salary is calculated on the basis of slabs. What are all the slabs? If we just go back, if we go forward, yeah, these are the slabs. Suppose 0 to, let's assume you have a salary of 12 lakh of rupees. 12 lakh of rupees, there is no tax that the organization will deduct out of your salary. That is a TDS. Suppose if your salary is 15 lakh, they will calculate on this slabs basis. 0 to 4, they will calculate 0. 4 to 8, they will calculate 5%. 8 to 12. Suppose your salary is 18 lakh. You fall under category of 20%. That doesn't mean they'll abruptly calculate 20% as a total salary into 20%. It is not like that. First 3 slabs they'll calculate 5, 10, 15. The balance of above 16 to 18 lakh of 2 lakh rupees they'll calculate 20%. That's how this is new tax regime. You don't have any sort of deductions from this income. So that is the slab. Yeah. So TDS is deducted. They will calculate the total tax, estimated tax, based on your estimated income for the year. They'll calculate the total tax, they'll divide it by 12 and start deducting from your salary every month. That is the tax deduction they do from your salaries. The third is statutory deductions, which I have just mentioned. It is provident fund, employee state insurance, and property tax, professional tax. Provident fund is what you get back, employee state insurance is what you get as a benefit accessing the hospitals registered under ESI, and professional tax is the tax that you are supposed to pay. You don't get anything back, that is a contribution to the state government. Employment benefits, like gratuity is what you get back when you are into employment if you serve for 4.5 years or more than that. And paid leave is what you get. Medical insurance is retirement benefit. Retirement benefit again, like earn leave, encashments and all those things. But here is the catch. If you don't have a grip as how much is the amount of deduction they have done. How did you calculate? What was the amount they have deducted? Did they really deposit that amount to our credit, to our PAN card, so that reflects in our personal income tax login? That is when if you ask Form 16, if they can only give you Form 16 and they are really deposited that money on your name. If they're not, few of the not just hospitals, their accountants might not have a perfect information about it. Accountants might change. In that case, they might not deposit the complete amount of deductions from your salary. So they will not be able to give you Form 16 if they have not deposited the complete amount of tax deducted from your salary. So Form 16 is what you are supposed to ask them. In case of salaried employees, Form 16 is something you are supposed to ask from them, and that is what Form 16 will have information like what is the total salary we have, what is the tax they have deducted, and the deposit numbers of tax. This is all information written in the Form 16. So this is things that you are to indicators of salaried income. These are all the things you are supposed to take care. Now verifying the professional fees. Suppose you are you are working as a consultant to a hospital. You have an independent engagement. Your engagement should you should go through all your engagement agreements like a contract. What are the number of hours and all those things, and in this case tax is deducted at 10% under section 194J. Here you are supposed to ask for Form 16A. It is not mentioned here. It is mentioned here. In salaried case you are supposed to ask Form 16. And in professional fees case, you're supposed to ask Form 16A. That is what will have information all about your deductions and deposits and deposit number. That is when, if you ask Form 16, they have provided Form 16, that means that is being credited to your PAN number in your income tax portal. How will we use that TDS that is already deposited on your name? We'll come back to that later. And this is something which I've already mentioned, raising an invoice and GST registration. Claiming the business expenses. When you are providing service as a professional, not as a salaried employee, you are allowed to deduct expenses while calculating tax. What are all the expenses that are allowed to be deducted while calculating your tax? Like you have used a vehicle. So you might have bought that vehicle on EMI, so interest that you have paid is deductible. You might have a driver, so salary that you are paying to the driver out of your account to the driver, that is deductible expenses. These are all deductions not allowed in case of salaried employee. This is only allowed in case of professional income. When it is being treated as a professional income, it is all allowed. Like you have a phone bill, you have travel expenses, you have gone for a consultation for a different state. Traveling expenses, what you have incurred, that is allowed as a deduction. But when in case of professional income, you have medical equipment cost, you have your personal equipment that you carry along. You might have bought it for an EMI, it's interest paid on that, or depreciation, what we call, that can also be claimed as an expense against the professional income. Staff salaries, you have a personal assistant that you carry along whenever you're going for a consultation. And the last thing is books and tax audit. First of all, when your total professional income exceeds 2.5 lakh rupees a year, you're supposed to maintain books of accounts. What do I mean by books of accounts? You're supposed to have a proper audit trail, like where all you have received the amount, whether the invoices were raised against that, whether we have expenses. If we have expenses, do we have invoices, supporting invoices for that? See, Indian income tax is based on self-assessment. We are almost close to 150 crores of population. But how many tax officials do we have? Hardly 10 lakhs, 15 lakhs. They can't come and check everyone. So that is when they have said you assess your tax yourself, self-assessment tax, and pay the taxes. But when we randomly select any particular person, we will ask you all those things. But many of us might have not gone through all these things. What am I telling? Raise an invoice, maintain expenses, bills, and all those things. But God forbid, if our case is selected sometimes from the department's notice, now they are moving to AI. We don't need 10 lakh income tax officials as well. That 10 lakhs income tax official work is being done in a day now. That is the transformation that is happening. So our cases are likely to be selected. They are triggering indicators when they will select the case for a scrutiny. When the scrutiny happens, these are all the information they will call for. Maintenance of books of accounts, I was discussing. So when your total income, professional income for a year exceeds 2.5 lakh rupees, you're supposed to maintain all the records for your expenses and income. In case, if your total professional income is exceeded 75 lakh rupees a year, then you are supposed to get your books of accounts audited by a chartered accountant. What do I mean by chartered audited? A chartered accountant verifies that all your incomes has been offered. That you are telling that 75 lakh is what is my income, but bank statement says that you have a credit of 1 crore. So chartered accountant will comment that this person has not declared entire money, as he is not offered entire money to his credit as for a for taxation. So a chartered why is it mandatory that tax audit is supposed to be done? Means that a chartered accountant is responsible when he's signing the statement for a particular hospital or a person. If his income is more than 75 lakh, the incomes and expenditure, I have vouched for it. This person has the supporting document for all the expenses, and this person, the profit what he is declaring is correct, and the taxes he has paid is correct, is what he vouches for and gives the certificate. That is called a tax audit certificate. So chartered accountants, 90% of the chartered accountants will not go, even if they'll not just sign everything is okay if you don't have the records. Either they will want you to create the report, or they will comment that you don't have a record. So that is when your case gets selected. If the income is more than 75 lakh. If your income is less than 75 lakh, you don't need a chartered accountant for an audit. Maybe you need a chartered accountant for filing, for helping you file, but you don't need your books of accounts to be audited. So that is the case in case of professional fees. So okay, now coming to the third point, doctors who have their own clinic, who has their separate, they're running as a business, they have a hospital. So what are they also? They are supposed to raise all revenue. So whoever doctor visits to that. This is the other side of it. So far we were discussing, we were as an individual doctor. Now the other side, we are running a clinic, we are running a hospital. So what are all the things that we are supposed to take care? We should have all records, business income, all revenues from treated as a business income. Yeah, all the revenues that we are getting in a hospital, like through a consultant, through a pharmacy sale, that is treated as a business income. It is mandatory that we are supposed to maintain books of accounts and GST registration. Let's see if we really have to get ourselves registered under GST. When is it that we are supposed to get ourselves registered under GST? Let's say if you're only providing a healthcare services that are exempt, you're not providing anything which is taxable, and you're supposed to get yourself registered under GST. Never. You're only providing an exempt service. You're not providing any taxable services. You're not required to be registered under GST. What do I mean by exempt services? Generally, all the services you all are providing are exempted. Generally, but there are cases where the services you provide becomes taxable. Let's say, see this, please. Exempt supplies, no GST. General medical and consultation and treatment, no GST. It falls in the exemption category. Diagnosis and care, illness, injury, it falls under exemption. Preventive health checkups and vaccine, it falls under exemption list. In clinic, hospital service, exemption. When it is medical legal consultation or court testimony, medical certificate for job, visas, fitness, wellness and slimming programs. When you are into the renting space for hospitals, when you are renting equipment, medical equipment to the hospitals, it again is a taxable thing. Pharmacy sales. Now there is a small clarification that is needed. You give, as a hospital, you give a package for a particular surgery. You don't really charge separate for a pharmacy. Then that falls under exemption category. But after the surgery is done, you write a medication to the patient. The attendant visits to your pharmacy and buys the medication separately. That becomes a taxable thing. If it is a part of your package and it is majorly for an exempt services and you're not separately billing for the pharmacy, it is not taxable. But when you're selling it separately, that's not part of your package, then it is taxable. So the exemption list is this. It is an illustrative list. It goes along. So I've just kept a few of them here for you to understand. So yeah, when you only supply exempt supplies, you don't have to get registered when not required. If you only provide healthcare services exempt. But when you provide exempt and taxable both together, then 20 lakh is the limit, after crossing which, when you are estimating that your total turnover is going to cross 20 lakh, when you are providing both taxable and exempt, then you are supposed to get registered under GST. Even after registration, you are not going to pay taxes on your exempt supplies. That will remain exempt. It is only about the triggering turnover, after which you are supposed to be registered under GST. And for the taxable supplies for which you are going to pay taxes GST, that is supposed to be collected from the patient. You are not going to. That is not a cost to you. You are collecting from the patients and you are paying it to the government on behalf of the. That becomes B2C supplies. So this is needed because a lot of hospitals, small clinics are there. They make a good amount of turnover, but they are not aware that they should be registered under GST or not. So that is the point for when is it that you are supposed to get registered under GST. Raising an invoice and GST registration. That is what I was telling. If the turnover exempt plus this thing goes above 20 lakh, you are supposed to get registered. Claiming expenses, it is all those expenses I have mentioned. You are supposed to maintain the books of accounts for all those things. So okay, debunking. I'm not telling you do it somewhere around, but I'm telling you the cross checks. So every time when you are making your income tax return filings, make sure your bank statement is reconciled with your tax filings. So the incomes that is tax deducted already and getting credited to your bank accounts, you are ready to disclose it. But something which is not already there, which is tax has not been deducted, direct consultation at your clinic, those things are also supposed to be disclosed. So something you have taken in cash, you are declaring it. If you're not declaring it, that becomes black. Something you have taken in bag, but you're not declaring it, again that becomes black. That you are not disclosing it. It is not where is it? It is about your intention. If you're not disclosing, which is already credited to your bank, ऐसा नहीं है कि बैंक में तो आगे आना मतलब white है. No, it is still black because you have not declared it. You are supposed to declare those income. And a lot of times when your case gets selected by any of the parameters that will be discussed by the chartered accountants later, उस वजह से जब आपका case select होता है, they'll scrutinize your each transaction. the total credit is 1.5 crore. You have offered income of 60 lakh only. What is the reason? You can't give that. That is a loan. 400 rupees, 500 rupees of consultation at source. The source, whoever is the source for you, the hospitals, the wherever you are working, they will deduct from your the payment they are making to you. So you look, they deduct from you and they deposit on your PAN. So that is only an advance tax until and unless you calculate your income tax liability at the year end in assessment year. So suppose you have a tax liability of 1 lakh rupees and the tax deduction was 40,000. So you are supposed to pay 60,000 from your end in the assessment year. In the second case, your tax liability is 40,000 but tax deducted was 1 lakh rupees from all your consultation. So you will get back that 60,000 at the return. That will only happen when you file your income tax return. It will not happen automatically. We are supposed to calculate all our taxes of the financial year in the assessment year. Only then you will get back the refund. A lot of time you will get money in your account. You are not aware that the taxes was deducted on that. Only when you log into you should also have a basic understanding of logging into your income tax portal and accessing who will have deducted your tax. Many of them might pay you in cash, but they have deducted TDS on that or paid TDS on that and mentioned on your PAN. Then even if you have collected in cash, you're supposed to report that. That is in the case of TDS. So these are the few basic things that you're supposed to report to income tax and goods and service tax, GST. In case of income tax, most of them might know about it. GST is not something as a cost to us because it is collected from the customer, paid to the government. But income tax is something a cost to us because it is assessed on the income. For salaried employees, it is directly on the salary except the standard deduction. For businesses for them it is after the expense. Anything remained after the expense, we calculate tax on that. The profits, if it is lost, then you don't have to pay any taxes. So in income tax, it is direct tax applicable to following cases: salary, bonus, commission, incentive, gratuity. Gratuity is exempt until 20 lakh. Just mentioned after that, if it is more than 20 lakh, it is taxable. Sale of shares. Nowadays, all your share trading is happening through Demat account. Demat account will not be opened unless you have linked your PAN card. So all your transactions, even if you have sold for 110 rupees of share, you will recollect, अरे मैं करा था कि हाँ एक बार टेस्ट करने के लिए किया था. That is there in your income tax portal. So you can't hide it. You have to have a control. What all information you have as in your Demat account, everything has to be disclosed. Sale of share. Okay, you might have not made money, you might have incurred losses, but you have to disclose. Losses है, you are allowed to carry forward the losses. But when you file within the due date क्या है individuals के लिए 31st July. 31st July is some generally due date, but this year it got extended until 15th of September because the forms were released late. Sale of shares and mutual funds. Even mutual funds, even if it is ATC deductible mutual funds, even that is taxable. But when you sell it, you made money. The cost minus the sale price is the difference amount is taxable. If it is long term, when it is long term shares, if you hold it for more than 12 months, it becomes long term. Long term is taxable. Gains are taxable at 12.5%. Okay, lot of us are not aware that sale of gold and jewelry is also taxable. If you are making money out of it, you bought in cash, you're selling it in cash. Okay, you know how to do it. But when it is reported through accounts and everything, you are supposed to pay taxes on gold and jewelry sale also. So I was just discussing long-term capital gain, short-term capital gain. Nowadays, when we sell a property, we go to sub-registration office. They'll not register your property unless you give them a PAN card. Why are they asking your PAN card? It is not just for the sake. They're reporting all your sales, property sale from sub-registration office to the income tax department. Income tax department will wait for a year or two. That did you file your income tax return? If you have filed your income tax return, did you disclose this sale of property transaction? If you have disclosed, they will not issue a notice. If not, after 2 years, they are going to issue a notice that this was the transaction that was reported from sub-registration office. Why didn't you disclose it? Disclosing is first part. Second part is calculating if it is a gain or a loss. If it is loss, then you get carried forward. If it is gain, you have to pay taxes. Rental income from residential and commercial property. Okay, a lot of you have a properties. You get a rental income. That is getting credited to your bank account. You are not disclosing into your income tax return. Tomorrow, if your case is getting selected, they will ask you, why is it the same amount getting credited to your account every month? That is also supposed to be reconciled. You are supposed to reconcile all your profit from running a business. You have a hospital, you got a profit, you get a profit, you pay taxes. Freelancing income, okay, you're supposed to pay taxes on that. Professional fees, doctors, lawyers, architects, okay, you're supposed to pay that. Interest from saving bank account, even that you're not aware. You have 10 lakh rupees in bank balance in your account, Interest is getting credited every quarter. You're not aware that interest is altogether 80,000. Let's assume 80,000. Only 10,000 is exempt. Above that, everything is taxable. You're not aware about it. That is, income tax has that database because bank is reporting it. Bank is reporting that this account person is getting so much of interest. FD interest taxable. Recurring deposit interest taxable. Dividend income. Dividend income earlier it was exempt. Now it is taxable. Your dividend income is you buy a share, you're holding a share, on that share you get a dividend as an income. Profits distributed by the company, that is also taxable. Gifts from relatives is exempt. Your father gifted you 1 crore rupees. He had white, he has earned throughout his life. He has 1 crore in his bank account, he is gifted to you, no tax. But if it is gifted by your friend, if it is actually a gift, not a hand loan, it is taxable for you because it is not gifted from a relative. Income tax has a definition of relative. If it is gifted from your relative, it is exempt. If it is not gifted from the relative, then it is taxable. Winning from lottery, horses, game shows and all those things is also taxable. Okay, now GST is like you are supposed to register. I have mentioned when are we supposed to get registered. 20 lakh is in the case of services. If you are only into the sale of products, the turnover is 40 lakhs. Once you cross this, you are supposed to get registered. Once you are registered in the GST, every month you are supposed to file GSTR 1 and 3B. The unit 11th and 20th of the respective month, following month. You have to pay CGST, SGST, IGST depending on the type of supply. If you are doing it, the supply, you're selling it within the state, you pay CGST, SGST half. If you're selling it outside the state, you pay CGST, SGST, you don't pay CGST, SGST, you pay IGST. Suppose you're giving cosmetic surgery service, price your service as 1 lakh rupees, the tax is 18%. So you bill customer 1,18,000. So 18,000 what you have collected from that person, that has to be deposited to the government. That was never your income. That has got credited to your bank account because that is a liability on you to collect the GST from the customer. So yeah, so that is the GST and this. Okay, so that is that is what I was trying to explain, tax and basic understanding of it. Okay, we have not gone to the in-depth of it because this is the first time. We have assumed that everyone to be on the same page. Maybe next time when we discuss it, we'll go a little in-depth into it. Before I conclude this thing, I really want to thank Dr. Hussain Junaidy sahab, and I really want to thank everyone of you who have taken out time even from your demanding schedule on this leisure day on Sunday. Yeah, thank you so much.